Good morning, everyone. JR with Secure Metals. Welcome to another technical look at the precious metals sector. Today is Tuesday, the 5th day of August. It is 10:31 a.m. Eastern Standard Time. Very exciting time right now. Finally broke through this range here. We're going to get right to the technicals. I'll do some silver. I'm going to do some gold. I'll do the Dow Jones as well as the dollar index, okay? So I'll make this very quick. Again, very exciting times here in the metals market. The silver rally right now has taken a little bit of a pause. It looks like it is taking a little bit of a break, and we are looking to target this zone here. This is the last zone. On my last video, I did mention that this is the zone where I'd like to see before we make our last purchases with a quick stop loss here, roughly at around 1939. This is on a short term, a very short term trade. If you're going to go long term, again, the great opportunity to buy between here and 1875 if it continues to go lower. But I like this trade here, coming in here, again, 1965 around there, really 1975 all the way down to roughly 1946. You can do a quick short-term trade. But again, if this rally is going to last, I would assume that we are going to touch this level here, hopefully bounce and take it much, much higher. But as of now, this would be the quick trade here, going in between 1975 and 1945. This is your buy zone. On the weekly chart, that's your daily chart, by the way. On your daily, really, this is the zone on the weekly. The weekly appears to be between $19 and 1864. A fall below 1864 will be catastrophic for silver, at least I believe. And on the monthly chart, again, you're going to look for buying opportunities between 1918 and 1864. Though given the current fundamentals, I really don't expect the market to continue to go down that much further. I'm thinking that we're probably going to hit this zone here, bounce up from here, and hopefully find a direction from there. But let's look at gold. Until we break this level here, we are bullish. The second we fall below 1259 and have a close below that, that's going to be very bearish. And most likely this triangle that you see here will be broken, and you might see a move like this, test this level, come back up here. This level will now turn from support to resistance, and it might push us down to the $1,200 range. I don't expect to see these types of levels down here simply because there's just way too much fundamentals involved right now. So you see the Dow Jones plummeting. You're seeing equities fall. And right now, it just looks like people are doing a balancing act on their portfolios. But definitely, when you look at this Dow Jones, you definitely want to look at gold and silver. Look at them as great buying opportunities. I like gold right here, almost at my target, just like silver. Right here in this zone. If we put the fib level here from here to the high, oops, that's not a fib. If we put the fib level from here, okay, this is from the June low to the July high. This is the zone you want to get into. You're going to have a confluence of support as well as the this triangle here. So between this triangle here and this support zone here, I would expect the market to challenge at least the 1293 range, the 1305 range. But really what I'm looking for is a move all the way up here to this triangle. So I'm looking for a minimum move to 1320 from here. Great price, great risk to reward. I actually like the gold better than the silver. I think the silver will return more if it continues to go higher as far as percentage, but as far as a trade opportunity, I like gold in this zone between 1259 all the way to 1278 until we go in here. Now, we saw yesterday we can't hit this 61% fib level here at 1281. Bounce from here, retested the 50% level. Now we're retesting the 61% level again. Like I said, a fall below here, this is your zone. You're going to find support on this triangle. Roughly 1264 would probably be the best buy if we do come down here that far. But what I'd like to see is, I like to see this metal hit this zone here at 1278. You might hit the zone and you might take off from here, or you might hit this level here, roughly 1264, 1265, and then bounce back up. Okay, so that's what I would expect, and I would expect a peak. I would expect the test of the top of this triangle here. Okay, again, a breach of this triangle, most likely you're going to go much further. Let's do the Dow Jones here briefly. Again, if you've been listening to my videos, I actually called a short here at around 17,132. I said it was a 3-to-1 trade, and it actually worked out lovely. Okay. It came here again. If you took that trade again, you made money again, because after it gave you the 3-to-1, it went back up to 17,134 was the high, and it went down again there. That's when it broke this ascending wedge. Okay, so broke the ascending wedge. This is the level here that I would probably consider if you're going to do a swing trade. So again, this is the level of support. We're looking between 16,312 and 16,378. That's on the daily. If you look on the 4-hour chart, this was the level. As you can see, it actually hit the level. It bounced right back up. That's on the 4-hour chart. But again, on the Dow Jones, I wouldn't trade the shorter term time frames. I would just trade the daily or the weekly. Okay. So again, on the weekly, this is where you're probably going to find some support. Okay, I would say between here and there. Okay, and of course you have more levels over here also as well, and of course another level over here. But again, this obviously still very much in an uptrend on the weekly chart. You've broken through these levels of resistance. I'm sorry, of support. Now you got to break another level of support before you can call this a downtrend. So really, we'd have to see a close below 16,300 before we can call this a downtrend. Okay, let's look at the dollar index. That's the last thing I want to take a look at here. Dollar index right now seems like we have a really nice bullish candle here. This is your level to beat here for the dollar index. Okay, this was a key level here. 81.50 was key. All right, this was this previous high. Now the next high that you're going to look at is actually these two right here. So you're going to look at 81 or on 81.75 or 82. If you can close above these levels, the 81.72 range, 81.75, even better if you close at 82, then the dollar is going to continue to go higher. Most likely you see the metals decline. But the one thing that you do want to keep in mind is that the dollar is well overbought. And again, it is running into a big zone of, let's see here. This is definitely running into a big level of resistance. All right, and this level of resistance is going to be roughly right here. Okay, and remember, we still have not closed above this level here. This is this November high of 2013. Okay, so this is the high. So as of yet, we are yet to close above this 81.50 zone. Currently testing the 81.60, but have not closed above it yet. So we haven't closed above it yet. So we'd like to see if this 81.60 is going to hold after it closes today. It could go up and then come back down and still close below this 81.50. But again, key number is roughly this area here. That's key number 1. And this would be the second one right here. Okay. Okay, so this would be your first one. You want to see a close above 81.75. This would be your second one. You want to see a close above 82. All right. So in order for the dollar to continue to go higher and in order for the metals to continue to go lower, the dollar would have to surpass this whole area here. Roughly right here. I can't draw the way I can on the other chart, but that's the way it is. All right, and that's the dollar index. All right, hope everyone is doing well, and hope not everyone is stuck here in this giant bash here that we've had in this Dow Jones. All right, wish everyone good luck, and we'll see you next time. Thanks for joining me. Bye bye.